Hey everybody, this is Jose here. How are you everyone? We're about to start in just 20 seconds or so. This is a sound check, so please go ahead and confirm that you hear my voice by typing a quick hello or a quick sound okay on the comments box. So that way we can start timely. Thanks a lot. That's perfect. Thank you so much everyone. Good, so we just reached the starting time for the session, the top of the hour, and therefore it's time to begin. And very nice to see you all. Looking at the names on the comments box, super traders here with us today, so very happy to be ready for our short-term session, first session of the week. Okay. Let's begin the session. Today it's June 11, 2019. My name is Jose Blasco. I'll be your guide. Today, as you probably know already, we are getting together for short-term trading purposes. So we're going to be looking at intraday trades. I had a very interesting question asked to me on the Sunday when we conducted the sharpening session. And therefore today our intraday trading, I'll give you two ways to be an intraday trader. One way that is more active, one way that is less active, in order to catch longer moves as well. So we'll talk about these couple of variations which somehow I already explained it, but I never demonstrated it. So we'll be doing that today as well. Okay. But before we start, disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good, perfect. So we have the introduction of the session done. We are ready to start. Actually, there is a couple more things I would like to mention before we start, and I'm sure that some of our colleague traders are joining the room as we speak as well. So I would like to also comment on a couple of things just to also give them a little bit of extra time to join us. So this is our website. I believe this is nothing new. When you look at Get Together, okay, I want to point at the special session that we're going to be doing later today or tomorrow, depending on where you are in the world, because the session is going to be at 10 p.m. US Eastern Time. Okay, of course, this session will be recorded. You probably know already, but just in case, this is a special session that will be conducted together with Chuck, who is an incredible options trader, and he's going to expose you to a way on how to utilize options for intraday purposes. Okay, so it's going to be a pretty neat way to also take advantage of intraday opportunities from a different angle. Okay, so very interesting session. Talking about sessions, the other thing I wanted to make you aware of is that tomorrow we also have a special session running within FX Street. Okay, so if you want to attend this session, it's a free session for you to attend. This is going to be a basic session, but also very powerful. The name of the session is going to be Do's and Don'ts in Trading. So basically, we will not be talking about trading methodologies. We will be talking about certain behaviors or actions that could be very positive or can be very painful or very hurtful. Okay, so sometimes traders get in trouble and they think it's their methodology, and the fact is that that's not the case. So it's important to always look at trading from different aspects, including trading psychology and others. Okay, so we'll talk about do's and don'ts in trading. That's an open session. The only thing you need to do if you want to attend is use the website fxtrade.com. You will need to get yourself a login username, which is free, and then you just come into, let me show you, you just come here where it says live video. You can look at show schedule, and the moment you click live video show schedule, you will be able to see June 12th do's and don'ts in trading with Jose Blasco. So the moment you click on that link, it will open this page where now you can go ahead and you can click on the register button, and as you can see, we got 1 day to go, 1 day and 1 hour to go for this session to be running. Okay, guys. So just letting you know, in case you have the time, this is going to be, by the way, at 2 p.m. GMT. Okay, so not fully sure in the US time zone what time would that be. In Asia it's going to be evening hours, in Europe it's going to be middle of the day, and in the States it's going to be morning hours. But you know, you can go ahead and do the conversion yourself. I don't want to make a mistake by doing it by out of doing it with my head. Anyway, so here we go. So back into the charts and ready to get started. Yeah, it seems that Carolina is having problem with the sound. Just, well, if you have a problem with the sound, you cannot hear me, Carolina, but make sure, you know, I'm just gonna type it. Yeah, sorry guys, I'm just typing. Oh, it's working now. Okay, got it, perfect. Thank you so much, no worries. So anyway, so let's get started, okay? And here we go, we got TradeStation here. So the first thing I would like to point at it is, as always, we got our common time frame, which is 15 minutes. Our beautiful moving average, EMA, together with the DMI below. As you can see, the prior close was above the moving average and the DMI was green. So we are in a trending environment where the right side of the market is the long side. Okay, so we want to plan long trades on the S&P. Okay, if we were to look at the NASDAQ, I'm switching workspace to NASDAQ. With the NASDAQ, we have the same setup as normally happens, where the close is happening up above the prior EMA, and we also have a green DMI, all of this looking at the prior candle, and therefore we are in the same market condition. The right choice, okay, the right side to be is the long side. Okay, this is what we have concluded. So out of using the 15-minute time frame, we will be planning on those long trades, which we will in just a minute. Okay, but I can see Orlando is with us in the chat box. Orlando the other day had a very good question about, okay, what if I want to be exposed to moves that are a little bit longer lasting, okay, because the trades that we normally execute using 15 minutes and 2 minutes, normally those trades are of a pretty short duration. So what if you wanted to be still an intraday trader, but just, you know, widen a little bit there and expose yourself to trades that could be multiple hour trades, half a day trades, things like that, okay? How can you do it? Well, it's actually quite simple. Okay, but I never done it before, so let me explain it quickly and let me do it. So today we're gonna do both. Okay, so here is a table you have seen before. Okay, which is a table where, let me zoom in a little bit. Okay, what you see in this table is on the left the S&P, right? If we are using the common time frame 15, you know you're instructed to use the edge time frame 2 minutes, and optionally you can use the 2584 share bars and the 1597 tick charts, and that's what we have been doing. We have been doing, you know, all the time, you know, most of the sessions, and it's great. Okay, but again, coming back to Orlando's question, what if you wanted your trades to last a little longer? Well, then it's very simple. You would want to use a common time frame of 60 instead of using a common time frame of 15. Okay, now if your common time frame is 60, then the edge time frame will not be 2. The edge time frame would be 5, would be 8. Okay, and the share bars and the tick chart that would be 2584 and 1597, well, now they will need to be 67, 65, 2584. So basically the only thing you will need to do in your workspace is change the time frames from 15 to 60, from 2 to 8, and then 67, 65, and 2584. And then you will just simply go ahead and apply the very same rules that we have been using, no matter the time frame, to do your trading. Okay, so take a look at this. I'm gonna open a workspace for myself. Notice how the one I have below, okay, notice how the one I have below is EMA Lab ES15, okay, which is this one here, okay, but I also have one that I have prepared, which is ES60, okay. So if I open the ES60, let me do it, click on the workspace, click open, okay, what's going to happen, I'm going to have the same, very same type of workspace with the same time frames, all the same, but what's going to be different will be the time frames that I use. and therefore that will impact the duration of the trades. It will also impact the risk of the trade, because the higher the time frame, the wider the UFOs. So the distance between entry and stop is more, but also the distance from entry to target is more, making the trades to last more. Okay, so what do we have? Take a look. Below I have the 60-minute common time frame, and above I got, for edge time frames, I got the 8, the 67.65, and the 25.84. Okay, and then I got optionally reactive time frames, 15.87 and 610 tick. Okay, so same concepts, same time frames, same rules, same application, but just because we went, one step higher when it comes to the common time frames, everything now is going to be much more long lasting. Okay, because notice the difference. Now, if, let's say, for example, you took a trade when the S&P was in an uptrend in this candle, and let's say when the S&P came back, you got into a trade, okay, and then the S&P went up, and let's say when you get there, you took your target. Okay, so if that was your trade, so you purchased around let's call it 94, and you took profits, let's say 02. So how much you made? You made 18 points. That was an 80-point trade. And how long it took? It took like 4-5 hours. Okay, where if you have done something similar with the S&P 15, okay, so let's say, for example, you got into this trade. Okay, so in this trade, okay, so you have close above the average, the DMI is green. So let's say the S&P came back into a UFO in this candle, you got in, and let's say you got out at this point. So that was 1, 2, 3, 4 candle duration. 4 times 15 is 1 hour. Okay, and your 1 hour trade went from 29.01 to 21.07. So you made 6 points in 1 hour instead of 18 points in 5 hours. Okay, so what if I want to be into 5-hour trades? Well, I would use the 60-minute combination. What if I want to be in 1 hour trade type? So I would use the 15-minute combination. Okay, and hopefully this clarifies, Orlando. Okay, very, very simple. Okay, everything is scalable, including the process. You don't need to change your methodologies. You just need to change the time frames that you use to be able to expose yourself to the market depending on your trading style, which has to do with how much time you have. Are you a trader who like to be very active or less active? What is the size of your account? Are you allowed to take a risk of how many points, right? Based on your risk management rules. Because remember, the higher the time frames, your UFOs will become wider, isn't it? So you have more risk in exchange for more reward, which is great. But if you have a risk management rule, such as a 1% rule, 2% rule, where you allow yourself to risk 1% of your account, well, if your account was to be small in size, you may not be able to use the 60-minute combination timeframes, okay? Because maybe your UFOs become too wide. So then you would have to be forced to use lower timeframes, and it's just because the size of your account does not allow you to use higher timeframes. If your account was to be of a greater size, then you can choose whatever timeframe you want. Capital is not a limitation anymore, and now it's all about your trading style. What are you trying to accomplish? How do you like to trade? You want to take 1 trade a day? You want to take 10 trades a day? So those are questions for you to be answered, and based on that, you select on the timeframes. Okay, good. Perfect. Hey Jose, on which time frame you define the second target? There is no second target, Mario. There is a final target. Okay, there is a final target, and then there is the safety target. So the safety target, we call it target because when you reach there, you do something, so it's a target, but really it's not a target. It's just something you do exclusively for risk management. So there is only one target, okay, and that one target is selected depending on the strength of the market environment we have. If the market environment we have, like for example here, gives you a close above the EMA and the DMI is also green, you are in a strong environment. If the environment is strong, then to set that final target, okay, which is the only target that we set, to set that final target, then you would want to use the next common time frame to whatever time frame you use. If the time frame that you use is 15 because you are trading the 15 combination, then the next common time frame is 60. Right? So you would find the target in the 60. If you are using the 60 combination, just like what I said a few minutes ago, then the next common time frame, if you are in a strong market environment, is the 240. right? If you were to trade the 240, because actually on the table you also have the 240, right? So now you are using the 21 instead of the 8, instead of the 2, right? And what is the next common time frame? Well, it's the daily. Okay, so 15, 60, 240, daily, weekly, and monthly. All of those are the combinations, okay? So you will go for the next one. Got it. Perfect. So I think the question is answered, okay? But anyway, so let's go back to what we're doing here, okay? Let's go back to planning some trades here. And what do we have? So let's begin with the SP. So again, strong market environment. The current EMA is pointing at 2905. So the question is, do we have anything around 2905? In the time frame, we have nothing. In the share bar, we may have something very close, so I need to double check that. And in the tick chart, we got nothing as well. Okay, so the only trade that we could take here would be this one here on the top. Okay, and to be honest, I'm gonna be a little uncomfortable to plan this trade, and I will explain why in just a sec. So the top is 2904.75. So that I'm okay with that. Okay, why? Because even though currently the average is pointing at 2905, if the market rolls down to get to our entry, okay, well, the average will also drop by a little bit. And if the average also drops by a little bit, that 2905 may become 2904, something like that. So I'm very happy with 2904.75, no problem. Okay, so happy about this UFO. Okay, happy about this UFO. But what I'm not happy about is where my stop would be, right? If I was to use a stop, which I should. We always use stops, right? Why? Because, you know, all those 4 UFOs are basically overlapping each other or almost overlapping each other, and therefore, you know, if I end up with my stop here, okay, my risk is that next thing you know, this UFO fails, but you know, price comes into the next one and bounces, and I've just been stopped out by 2 ticks, and then it went all the way to my target, and that would be quite painful. And the same thing happens here. If my stop is here in the white space, it's so narrow that I could see price just violate that UFO just to go back, and I just been stopped out by 2 ticks, and it turned just after. Why? Because there was another UFO. Okay, so unfortunately, I got too many UFOs. Okay, what a funny thing to be said. Unfortunately, I have too many UFOs, and therefore I would not know unless I take a guess, and obviously we don't do that. I would not know where to have my stop because there is no position for my stop which is reasonable enough. Remember, we want to have our stops in clear white areas on the chart, such as this place. That would be great, right? But if that's gonna be the location for my stop, this white space, well, yeah, imagine how much risk I'm taking. I'm taking all these risks, so many points to maybe make, you know, the same amount if I get to my final target. So that's gonna be a terrible trade from a point of view of the amount of money to be profited versus the amount of money to be lost. Okay, so I'm gonna give a chance to the NASDAQ to see if the NASDAQ is giving us a better setup, and if that's the case, we'll take the NASDAQ trade. And it is looking better in the sense that we only have one UFO. We don't have all these collections of UFOs. So with the NASDAQ, I will have a clearer place where to place my stop. Okay, but again, before we get too excited, let's look at the price of the EMA, which is 75.76. Okay, and to be honest, 75.76 should be good because it should be more or less here. Okay, let's take a look at what is the top of this green UFO, which is 75. Oh, sorry, let me show you that better. Here we go. Okay, I just want the box to stay on the screen so you can see it better. So notice what the top of the box is. Okay, it's 75.76. Okay, which is exactly the current price for the EMA. Okay, so of course, as I said before, as that NASDAQ rolls down, if that was the case, and drops by 10 points from 85 to 76, it's actually 9 points. You know, this EMA is supposed to go down by a little bit, and maybe it's pointing at 75, 74. Okay, but I'm fine with that because the bottom part of this UFO is 69.5. So, you know, basically, you know, it's looking actually pretty neat because it's even like the inner circle within the UFO, which is where we have the greatest concentration of orders. That inner circle is very likely going to be located very nicely lining up with the average. Okay, so actually it's looking very nice. Okay, One thing to keep in mind is that 69.5 is not going to be what determines the ultimate location for the stop, because if you look right, that UFO goes from 75 to 78, which means that we're going to have to put our stop below 68. I think I said 78, I meant 68, which means that really our stop will not go exactly in this location. It's going to be probably a little lower. Is that making sense? Just a little lower, because we do have overlapping UFOs here and here, okay? And if I look on the left, the 2-minute time frame as well is giving me exactly the same setup with 75, 75 and 69.5. Well, the 0.75 is not exactly the same, but the 69.5 is exactly the same. So we got 3 UFOs lining up with each other in 3 different time frames, and all of these lining up with the moving average in a strong market environment. My friends, this is looking good. Okay, doesn't mean we have a sure thing profit. This is trading. Anything could happen anytime. So we're gonna be perfectly, impeccably, professionally disciplined, and we will certainly use stops no matter how beautiful it looks. But it is indeed looking beautiful. Okay, so we're gonna look at the 60-minute time frame, because now that I know what my right side of the market is, which is the long side. Step 2, as you probably remember from the intraday lessons that we covered, step 2 is going to be to set the target, right? So to set the target, because we're in a strong environment, we went from the 15-minute time frame to the 60, right? And what I'm looking for in that time frame now is I'm looking for red UFOs, and the red UFO I found is located all the way to 76.95, which is 110 points above current price. Okay, so my friends, if we're right in this trade, this is a major profit to be collected. Okay, and it's quite far. Okay, and the problem, when I see this, here's the problem. Okay, and this is not a problem, by the way, but here's the problem. The problem could be that we may not reach the target during the intraday session. Okay, even though we started planning the trade with a 15-minute time frame, sometimes that's where the market is showing us on field orders today. Sometimes the market will give us opportunities in a way where the target is so far away that in one hand is very idealistic, is amazing, but in the other hand, you may not get there in one day. It may take more, just because it happens to be very far. And you need to keep in mind, if you trade futures, okay, and probably you know this just in case, that if you were to hold positions overnight, and overnight in futures means 1 hour, because the futures markets close, the NASDAQ in this case closes 1 hour from 5 p.m. to 6 p.m. Eastern time, right? So if you were to keep the trade open during this 1 hour, what's going to happen is that you're going to be exposed to overnight margin rates instead of intraday margin rates, which are normally in most brokers 4 times greater margins. Okay, so instead of you need like around $1,000 to be in the trade per contract, now next thing you need around $4,000 to be in the trade per contract. And if you didn't have capital enough in your account, you may get a margin call. I mean, you would get a margin call. So you need to be careful about that. Okay, and there may be times where you may need to give yourself a rule, which is, okay, this is my final target. Okay, hopefully we'll get there. But if we don't, maybe 15 minutes before the market closes, whatever price that is, I'm just gonna get out to avoid the extra margin required if that was to be a problem for you. Also, if you were not to be happy to be exposed to gaps overnight, okay, even though it's only 1 hour, again, a gap on leverage is never fun. So you would want to make a rule for yourself to be out of the trade before that. Okay, so little clock alarm or whatever technique you want to use, but just keep that in mind, because the target looks quite far. Okay, so what are we gonna do? Okay, well, we're gonna plan on this trade. Okay, and to enter this trade, because it's the NASDAQ and there is a lot of scrolling to be done, I like to have the matrix on the right for the NASDAQ because it's very pretty and beautiful and visual, but the reality is that the matrix is very much more useful with the S&P, because every point is $50. With the NASDAQ, every point is $20, so there are so many points that happen per day that in the end you end up scrolling up and down too much. Okay, so what I'm going to do to place this order, okay, I'm just going to use the order bar. I'm going to make these 2 contracts. Using the symbol NQM19, by the way, approaching next week where we'll have to do rollover, but not yet. So still using the symbol NQM19. So I'm going to go ahead to enter an order, single order long, with 2 limit and 1 stop. Okay, in other words, I'm going to use 2 targets, which again, we only have 1 target, but we use a safety exit before we get to the final target. So technically it's 2 targets, and then we're going to use 1 stop, which is going to be below the green UFOs. Okay, so let's begin filling in all the information. Okay, we know our entry is going to be the UFO here that we saw was 75.76, so that's going to be our entry. Let's talk about targets. Okay, the final one is going to be 76.95. That's going to be, sorry, I just typed it in the wrong place, 76.95. Okay, so that will be the final target. The safety target depends on where the stops will be. So then what I need to do is go ahead and place my stops. Okay, so my stops will go below 69.5, below 69.5, and also below 68. Well, it seems that 68 is the worst case scenario, so I'm going to have to go and use 75.67.75, which is 1 tick below 75.68. Hopefully I'm not speaking too fast with the figures, and if I do, hopefully the fact that I'm typing them is helping you to follow me. Okay, so we have an entry located at 75.76 with a stop located at 75.67.75. This is 8 points and 25 8 points and 1 tick. Okay, 8.25 points. So if I add this to my entry, which is 75.76, that would set my safety target to be located at 84.25. Okay, so 75.84.25, that would be the location for my safety target, giving me that mathematically calculated 101 where half of the position is unloaded. Okay, I say half because I'm using 2 and I unload 1 and 1, right? But if you don't use 2, let's say you use 4, then you do 2 and 2. Okay, and if you use 3, well, then you cannot do 1.5 and 1.5. Okay, so you may want to exploit, and we need to talk about this sometime, maybe in like 1 or 2 months later on. But we need to talk about micro minis, because that could be a way to do the 1.5. Okay, you can do 15 micro minis is the same as 1.5, or you just go 3, 2, 1. Okay, but ideally you would use half of the size. Okay, so anyway, so we have it. Okay, we have it. It's all good, it's all clear. Okay, and therefore it's now time to click on the place order button, which I'm doing. I guess that some of you are following me. So I am certainly welcoming you to follow me. Obviously, you guys know very well that the use of real capital or paper money is your decision, and also the size, which in my case is 2, is also your decision. Okay, but when it comes to the timing and the parameters, here we go. Okay, so let's say you have never done this before. It could be a great experience. It should be a great experience that you execute this in a paper money account, so at least you get to see it work. Okay, so I'm just gonna click place order, and the moment I do, it's giving me this box with the confirmation. Okay, click yes, and now the order is in the system. And you can certainly see how beautiful the trade is. I mean, look at the huge amount of room to get to the final target, which again, this is very beautiful, but at the same time, as I said at the beginning, a little bit idealistic. Okay, and so we'll see if this happens or it doesn't, or what. Okay, because again, you know, we may not get there in one day. Okay, so keep that rule in mind. Like 15 minutes before the market closes, go take a look. Okay, and you may want to close that manually to not have a margin impact. Okay, so let me take a look at the comments box, and guys, please give me some confirmation if everybody's with me on what I've just done. Everybody followed the process, and because my goal is not only that we execute this trade together, and hopefully, you know, we grow from the point of view of skill, but also account size, right? But also you also learn to do it for yourself. So when we are not getting together, you can also do that yourself on your own. Okay, so that's my goal. So please let me know if that was useful in that sense as well, and I'll be looking at your questions. Okay, so what do we have here? Milan, what you mean by confirmation entry? We call it reactive. Okay, we call it reactive entries, and we do it using the reactive timeframes, which is optional. Okay, so if you want to do an entry with more evidence, okay, again, I would recommend you, Milan, to watch those recorded sessions for intraday trading that we have in the get together list. because we talked about it there. But in any case, let me give you a quick answer here. So what you will want to do is that you will want to wait for the price of the NASDAQ to go back to the green UFO, and the moment it gets in the green UFO, you are just you forget about everything, and the only thing you are looking at now is this, the reactive time frames, those two. And if in any of those two, okay, you saw the price of NASDAQ going down, and next thing you know, now you have a new UFO forming out of the zone, okay, that's it. You got the evidence you're looking for. You have identified piles of micro unfilled orders, or I should say micro piles of unfilled orders, in a place where you expected them to be. So that would be your confirmation using your own word. Is that making sense? We call it reactive, okay, and it's only for the traders who like to trade with a little extra evidence, okay, which nothing wrong with that, even though it also leads to missing trades at times, okay. So we talked about this in sessions before. Orlando, you have a different calibration, yeah, so you have a different UFO, I get it. JC, I'm guessing JC is Juan Carlos, and if that's the case, I'm very happy to see you too, Juan Carlos. You use chart trading, very good. Chart trading is also very visual. To be honest, for a trade like today where the target was so far away, I still prefer to use a manual order, okay? Now, before I keep going with your questions, okay, we just had a new candle that began forming just like a minute ago. The market just opened, okay, and like a minute ago, a new candle started forming. So I wanted to point at this because we have the close is still above the EMA, market conditions are still the same with a strong DMI, it's all the same, okay, and also notice how the other thing that is still the same is also the moving average. And wait a minute, I believe I am making a mistake here. I'm making a human error, guys, and it seems that none of you realize it, so that could have been a mistake. So notice what's happening here. Really, the price I have with the EMA is 66, and for whatever reason, in my mind, I was looking at 75. The top of this UFO was 76, right? But it's 76 with 7 is not 66. So hey, somehow funny, but not so funny, right? This mistake could have cost us money. Little bit of a mistake here, human mistake. My bad, guys. So I'm just gonna cancel the order. So please do the same, cancel the order, because this entry will not line up with the average, okay? This is an entry that would line up with the UFO, but not with the average, given the fact that the average is pointing at 66, okay? So, so what happens here? Well, we do have UFOs at 66, okay? But similar to what the S&P gave us, okay? We have many UFOs on top of each other. So, if we were to take this trade, you will need to set up the stop below that one, okay? So, it is justifiable, because the target is so far that taking this risk, which is a pretty wide risk, I mean, the risk of 3 UFOs, overlapping each other is a pretty intense points risk. I'm talking about purely distance, right? But it's justifiable given the fact that the target is very far, okay? So I'm not concerned about it, okay? But, I don't want to plan the trade yet because we are 30 points away from that. So if I plan the trend now, we may be wasting our time, okay? So let's see if the S&P is giving us something different. So with the S&P, we got 06. 06, really, we got nothing with 06 because it's going to be a little less than 06 when the market comes down. So 07 will not work. 04 maybe, but if 04 works, we got the problem of, I said before, 4 UFOs overlapping each other. That's way too much risk. And 07 we don't. Okay, so we just need to wait. Okay, we're gonna have to wait 15 minutes, guys. 15 minutes later, this EMA will update, and the moment it updates, it may be lining up with the upper UFOs, and then we'll be able to plan a trade. Okay, but at the moment, we don't have this opportunity yet, so we just need to stick with our discipline and our patience for 15 more minutes. So that's 15 minutes I have to go ahead and look at Forex trades. Forex has been amazing in the latest part of last week. If any of you were trading Forex, but there have been very, very decent and powerful moves in many currencies, especially in some of the minors. And hopefully some of you have been enjoying some. So let's plan for a few, okay, guys? What do we have? Carolina, your TS froze when the market opens, so that normally represents the fact that you may have too many candles loading on your charts. I can see Brian giving you a little of advice about that. So if you could reduce the amount of candles, that would help you. If it doesn't help you, please send us an email to reach@tradewithufos.com, and we will send you documents on supporting how to do that for yourself. Okay, so keep that in mind. 60-minute charts on the has a 32-bit architecture, and there is how much transaction could process. That's why we reduce amount of bars, okay, to minimize the problem. There is another important issue for you to be aware of. That could be the reason why sometimes your transaction freezes, which has to do with the cash folder. Okay, so when there is a moment in time where your transaction is running too slow because of an internet drop or something like that, what happens is that the moment internet reconnects, then the connection starts adding a lot of data to your cache folder, and then transaction has to process information not only at the speed at which the market gives you the information, but also needs to play catch up with whatever was in the cache folder that was not processed yet. And there are times where transaction has a tough time doing that, and therefore when that happens, it's actually better to to simply go ahead and kill transaction and restart to make sure that everything you have in the cache is real time. It's worth it in order to avoid future problems. Okay. Yeah, guys, could you please confirm that everybody's okay with the stream? Because some of you commented that you lost the stream, where on my side it looks all good. I would appreciate if you could confirm that. And the first thing I'm going to do, Mario, is to double check your point about the 60-minute time frame. Okay. It's okay now. Okay, got it. Perfect. Okay, so and I am sorry about these guys. Yeah. So So what I'm just reading the chat box as well, guys. So what I was saying is that when I was planning the trade earlier, I correctly selected the 15-minute time frame EMA, and I made it line up with a UFO. Okay, so that was all good. Then I switched to the 60-minute time frame for the purpose of finding my target, and then I never switched back to the 15. So then later on, I got confused myself with the value of the EMA without noticing that EMA was pointing at the 60-minute time frame value instead of the 15-minute time frame value. That's when I said that I made a mistake, and the fact is that I didn't make a mistake planning the trade. I made a mistake later because I didn't switch back to the 15-minute time frame. Okay, so sorry for that, and if that was confusing, again, not my intention. Anyway, so I'm reloading TradeStation here. We may be missing on some opportunity because of the problem I had. It's part of trading. Sometimes, if we have problems like that, we need to keep cool. There will be more opportunities later today for sure. So we don't want to get all agitated just because we may have missed a trade. We need to keep patient, okay? And plan the trades the way we should, okay? So reloading my TradeStation here. I have deleted the cache folder. Yeah, Ellen, I can see that it seems that the result of the trade would have not been positive because of the major selling that move. I mean, when this happens and you get stopped out, it's time to be happy. It's time to be happy because all this major push to the downside, it's it's happening because of one reason, which is the fact that the on-field orders were canceled. Okay, so we'll keep planning on trades and keep working on this. Okay, so since we need to be waiting now 3 more minutes to see where the close is going to 60-minute time frame setup here. So common time frame is 60 and the edge time frame is 8 minutes, 8 range. Okay, those are the setups I have, and the time frames I got in the right, remember, they are optional. They are the reactive time frames only for the ones who wants to use more confirmation, okay, more evidence. Okay, so looking at the majors first. Okay, so Australian dollar, so we got a close above the average. Okay, close above the average. Careful, because even though the close is above the average, the DMI is pointing red, so we have a contradiction, right? Above it says above, where below it says red. So in other words, you don't have above and green, you have above and red. That's a contradiction, which means that we are in a weak market environment. It doesn't mean it doesn't make sense to take the trade, but it's going to be less, a higher probability. Okay. So the average is 69.56. Okay. And unfortunately, I'm not super comfortable executing this trade. Okay. Because, 59.56, it's the, let me do this and you will understand better. So if I look at my range time frame, okay, and I look at the labels and I use uncheck no overlapping, so my prices are lining up exactly with the UFOs. Notice how 56, which would be the ideal entry, is in the middle of the UFOs, and here 56, it's almost at the end of the UFO. In other words, maybe after 15 minutes when this candle closes, if the average went higher, maybe the moving average is now a little higher, so now we can plan on the trade. But at this moment in time, I will not be very comfortable with the Australian dollar because we will be buying too deep inside the UFO. So with the euro, what do we have? We have a similar market setup, the close above the average, okay, and the DMI is green, so we have a little bit more power on the euro. We have a strong market environment, okay. Unfortunately, the current price at which you would want to buy is 113.16, where there is no UFO until 112.95 or 113.12. Okay, so in other words, we don't have this beautiful situation where UFOs and averages are lining up. Okay, Great British Pound, we are above the average, green DMI, strong market environment. The average is pointing at 27.2. 27.2, it's more or less here. So inside this UFO. This one is 0.5, so really not helping too much. Okay, but we do have a UFO here from 27.06 all the way to for us to take a trade. Okay, now because the market environment is strong, I'm going to activate my UFOs on the upper chart to look for my target, but I'm not going to use the 1 hour time frame to find my target. I'm going to use the 4 hour time frame, because we are in a strong environment, isn't it? So you go for the next common time frame, which in this case is going to be 128.20. Okay, so 128.20 would be the target for the pound. Okay, 128.20. So we are going for that one. Okay, so let me disable the UFOs. We don't need any more. Go back to 1 hour. Let's not make the mistake I just made earlier with the NASDAQ. Okay. And now we're going to be able to plan on the entry. Okay, so what is the entry? The entry is 27. Okay, 27.06. Okay, we'll call it 07. If I go back to the rules that we have to trade Forex, okay, which you may remember from the Forex session, what did we say? We said that we need to add 2 pips to the buy orders, okay, and 5 pips to all stops. Okay, so that would be a buy order. Okay, buying at 127.06 would be a buy order. Really, 06 is really 07. So 07 plus 2 is going to be 09. So the buying price would be 127.09. That would be the buying price for this trade. Let me write it down. Okay, so we're going to have, let me go ahead and copy all of this. Okay, so we're going to have a trade where we're going to have a final target. Okay, final target will be located above, and we just said the final target is going to be 128.20 for the pound. This is a British pound trade. Okay, GBPUSD. Okay, using the major. Then below that, we're going to have a safety target, which I need to calculate where it's going to be because it depends on where the entry and where the stop is. Then I'm going to have a long entry. Okay, we know where the long entry is going to be. The long entry is going to be located at 127.09 based on what we said before. Okay, and then we're going to have a protective stop, okay, which is going to be located below, okay, and below is going to be below 126.92, okay, 126.92. But remember, because it's a stop, we add 5. In this case, we subtract 5, so that's going to be 87. Okay, so we'll make it 87. So if my entry is 27.09 and my stop is 26.87, okay, you could calculate the distance, which is the risk in pips, 127.09 minus 126.87. This is a risk of 22 pips. So if I add 22 to my entry price, which is 127.09, that would bring my safety target to be located at 127.31. Okay, and this, my friends, is your trade. Okay, a trade with a tremendous potential. Okay, where relatively quickly you would be able to remove the risk of the trade. Okay, you just need this market to travel 22 pips in your favor, if I'm not making a mistake with the math. And the moment the market travels 22 pips, you are now in a risk-free trade, shooting for a very, very far away target that may take, you know, full 24 hours, maybe even a day and a half or two. Okay. No problem with the margin requirements for Forex because there is no difference, because there is no close. Okay, Forex doesn't close. So anyway, screenshot time, and we're gonna go back to the equity index markets right now. Okay, it seems that everybody's following. Good. So back to the equity index markets. If you guys have any question or anything, guys, make sure you let me know. Okay. So what do we have? The NASDAQ had a close above the EMA. The DM want to do that. You want to enter. Course just form around 61 to 56. Okay, so 61 to 56 certainly and minimize processing power today, which means that there are many trades. This window keeps showing up. Okay, so now let's enter a long trade. I'm going to use 61.75 as the entry. Okay, so 75, 61.75. Wait a minute. I need to be using the 15. Okay, yeah. So yeah. So that explains it better, okay? So we are in a market environment where we have a downtrend on the NASDAQ with red DMI. This totally changes the setup of the trade. So, you know, sorry for that. But anyway, better realize it sooner than later. So to be able to find our targets, because we're in a strong downtrend and a strong market environment, because we have red and we have the closes below, okay? So because of that, our target would be selected to be in the 60-minute time frame. So the target would be, this trade is not going to be worth it, my friends. Okay, so we are not going to take it because the target will be 71.25. So we have like 1 point of room to make a profit. Okay, so no trade in this particular case. Again, so the beauty of the rules is that when the market is in a condition where something is about to happen and it's not well defined, basically the rules will not let you do it, right? So, for example, in this case, okay, yes, now we have the downtrend, but notice how the S&P has an uptrend, and notice how in the 60-minute time frame the green UFO is too close, right? And anyway, you kind of have a lot of contradictions, and basically the rules are stopping you from taking the trade until the market kind of clarifies itself. So let's say that now the market is going to fall and really drop nice. So what's going to happen? Well, not only your downtrend will be reconfirmed with a second candle with a close below and another red, but on top of that, what's going to happen is that the green UFO that we just saw on the 60-minute time frame will go away. Because if the market goes down, it's because the on-field orders has been taken away. The on-field orders have been cancelled. The on-field orders to buy have been cancelled. So the algo will pick up, remove the green UFO from below, and next thing you know, instead of having a target which is 75.71, well, your target is going to be the next UFO, which may be 75.55, and now you have room to make 15 points instead of 1. Right? So again, the rules will stop you from getting in trouble, even though, of course, it doesn't mean that we never get stopped out. We do, like all traders. Okay, but we always, keep ourselves safe. So it's super, super, super critical in days like today, where if you think about what happened, which is that the market opened, if you had taken that trade, you would have been stopped out. Next thing you know, the market is moving strong in the opposite direction. You see an opportunity to get into this trade with this UFO that is lining up with the average, okay, and you may be like, I want to be in the trade, yeah, but wait a minute, you don't have room. Based on the 60-minute time frame, you had a green UFO right below, right, and if you have a green UFO right below, right, what's going to happen? So what's going to happen is that, yes, this UFO will push the price down, okay, push the price down, hit the UFO, and then what? Come back up and maybe close above the moving average. And now you are back into an uptrend. And why didn't it go lower? Because there was a UFO. So the fact that we are looking at when there's no trade, okay, and obviously, so the rule would be if your safety target is further away than your final target, is that making sense? So that makes no sense, right? Your safety target should be nearer to price, and your final target should be way. Is that making sense? So that makes no sense. Right? Your safety target should be nearer to price, and your final target should be way far away, right? But if you're away, okay, final target would be like 2 points away, where your final target would be 1 point away, right? What is that telling you? Well, it's telling you that green UFO we saw in the 60, okay, it's basically stopping you from taking the trade, okay? So keeping you safe while the market defines itself, because now there is a lot of indecision and stuff going on, okay? Anyway, let me see your questions, comments. Yeah. You took the ES long on the 9 EMA, close the trade as per the timing trade rule for a quick launch. Very good. And that's the other thing, Bojan, and well done. Even though the push was significant enough that in the end that UFO didn't push the price up to continue the prior market condition that was an uptrend, the fact is that the risk management rules that you apply got you out of the trade with no pain, okay? And yeah, $75 is nothing in one hand, but in the same time, if instead of losing, let's say, $200, you made 75, then the difference is massive, okay? So good job by doing it, good job by sharing as well, in the sense that this is going to help very, very much other traders that are still learning or have less experience applying these methodologies. So thanks for that, okay? Anyway, so what do we have? 1 minute from now, we're going to have a new close, okay? So I'm going to replan on the trades 1 minute from now, and since today, for whatever reason, I feel myself planning less trades than what I would like to, so what I'm going to do is I'm going to extend the session just a little bit. I'm going to wait for the new close, okay, so we know exactly what is the new trend. We'll plan a trade on the NASDAQ if possible, we'll plan a trade on the S&P if possible, and we'll plan another trade on Forex as well, okay? So what do we have? So we just had a new close below the average. We still have red showing up, okay? So no contrary in a strong market condition for the NASDAQ to keep falling. So the question is, 60-minute time frame, 60-minute time frame, the question is, where is my next UFO? Okay, and my next UFO is still located, no, actually, here we go. That's exactly what I said before. The next UFO is now located at 47.75. So it's not like it's super far away, but now it's not 71 anymore, right? It's now 75.47.75 instead of 75.71 that was before. And why is that? Because this market movement where the market went down from here to here, you know what this did? It removed the buy on field orders, they got filled, and therefore they are gone. And because they are gone, this opens up room for the NASDAQ to keep falling. Problem, up, okay? Well, yes, we do. So this UFO, price is inside the UFO while we are touching the average, so it's actually time to enter. 79.75, it's overlapping. 79.75 is in the middle of this, so we're gonna have to set our stop above 82. Come on, TradeStation, show me the other bar. Okay, so we are shorting now. So going short with 2 limit 1 stop. So our entry, I'll make it market, is the current price because we are in the average inside the UFO. Limit, we're gonna have the final target first. We said is gonna be 75.47.75. Stops, we said that we're going to be above 82, so 75.82.25, 75.82.25. Those are going to be my stops, and the only thing that I'm left with is what is my safety target, which of course depends on my entry. Okay, so my entry is, let's call it 72. From 72 to 82, I got 8 points, 10 points. So I'm just going to make it 75.
Order filled
On the NASDAQ. Okay, and so the only thing I would want to make sure is that my stop 230. Okay, interesting. So it's not showing my safety target on the matrix for whatever reason. So I'm going to use chart trading to move it. So I want this one, instead of to be 290, I want it to be 230. So we need to see again, 2 losses in a row is not fun, but it happens. So what's very important, and this is to keep your emotions absolutely under control, keep cool. If you are a person who tends to be emotional, you may just make a rule for yourself where after, let's say, 2 or maybe 3 unsuccessful trades in a row, you just stop trading for the day if you feel emotions are hitting you. But for me, not a problem. We just got 2 trades following the rules, didn't work. Not a problem. Statistically speaking, they work very well. So we just need to keep applying the methodology. Now the methodology is asking us now to wait until the next close to see if this candle will close above or below the average. So we're just gonna wait, okay? And in the meantime, I'm just gonna go ahead and check on the S&P because the S&P may give us a trade or may not. So depending on that, we will decide, and then we will look at the Forex markets again as Yeah, Orlando, to determine the environment of the market being strong or weak, what you want to ask yourself, just keep in mind the word contradiction. Okay, for example, here you have the close below, so it's red, but the DMI is green, so you have a contradiction, right? So what does that mean? Weak environment. Here you have a close above, right? So it's green, and the DMI is green. So what does that mean? No contradiction. So no contradiction equals strong market environment, right? So that hopefully helps. Yeah, Jose, while you were setting up the NQFO, that was more or less here. Okay, they were kind of overlapping. Okay, and even though that went away, the one on the left, the one on the right was still there. So I was still kind of relying on this one. Was not so ideal anymore because that UFO was slightly above the average. You can see how my entry is actually above the average. You see that? Okay, and it was not ideal. Okay, but at the same time, so I just went for it. Okay, and nothing to change on this trade. It was following the rules. Okay, and it's part of trading that sometimes they will not work. So what you don't want to do is to try to reinvent the wheel or reinvent the rules. And I'm not saying that this is what you are thinking. your thought and question is very good, but as a generic concept or comment, I would like to add that as a trader, what you don't want to do is to try to reinvent the rules just because you got stopped out in one trade and it's like, okay, how can I make it better next time? Well, next time to make using rules that are proven to work, okay? And rules that are proven to work, can they give you 5 losses in a row? Of course. Is it likely? No. Can you get 2 losses in a row? Of course. Is it likely? Not so likely, but more likely than 5 losses in a row. Is that making sense? Can you get 5 winners in a row? Yes. Is it likely? No, but it could happen. Can you get 2 winners in a row? Yes. Is it likely? Yes. More than 5 winners in a row. Is that making sense? So you just need to keep calm, keep focus, understand your methodology, and just keep applying the rules. Okay. Even though sometimes it's more enjoyable than others. Okay. We gotta keep discipline. Notice how the market is really like kind of. I mean, if you are watching this by yourself, okay, and you have limited experience in trading, you may be thinking this market is teasing me, right? Because it's like, okay, it went up, it stopped me out, now it's back to be down below the average, right? So sometimes it's like that, okay? And in the end, it's all about the unfilled orders. So again, with the S&P, we have a close below the average. So we are in a downtrend, okay? But we do have a contradiction because we have red above and we have green below. So contradiction. So the market environment is weak. It's looking like after the close, it will be strong, okay? So what would you do? Okay, one of those cases where you want to reboot your computer and everything goes back to normal. But anyway, in 4 minutes from now, we have a new close. These UFOs may be at play, lining up with this average, okay, to get into a trade where the market retraces into the average and then keeps dropping, okay, and catch. Yeah, guys, sorry to, when I click in places, it just doesn't respond well. So, and on the Great British Pound, we haven't got filled yet, so price is coming down, so entry is 09 actually, okay, so waiting for the pound. What about the New Zealand dollar? Take care, Milan, a pleasure. Yeah, so yeah, I could understand it's not too nice if that's happening on your side. But anyway, I'll keep going, guys, okay? So New Zealand, US dollar, what do we have? So we have a downtrend. Average is 65.85. 65.85. We have no red UFOs at those prices. So we'll go for the CAD, US dollar CAD. So what do we have? A close above, weak market condition, 32.60. Yeah, it's a little too low within the UFO, so we will pass. What about the Swiss franc, USD, CHF? So we have a uptrend, average 99.19, 99.19, but the UFO is 99.03, 99.19 is up here, so not lining up. So we'll go for the yen, US dollar yen. We are, is it above or below? So the prior close was 66.2, the average was 66.09, so we are technically above the average, and we got green, so we are in an uptrend. Okay, so you will want to buy at the average is, well, we're actually below the average now, so not a good time. Okay, so I'm gonna switch from majors to minors. Okay, so I got some of the key minors here, currency pairs that have good levels of liquidity. Yeah, Bojan, I hear you with the crude oil. I am not using crude oil, not yet in these sessions, okay, because it's a little bit too volatile market, and since our crowd is a mixed crowd, I'm just focusing on safety first, even though it's an amazing market to trade, and we will certainly add it in the future, okay, but not at the moment. So Australian dollar CAD, actually we seem to have a potential entry. So prior close was above. Okay, the current average is 92.24, and 92.24 is exactly where the Australian dollar, Canadian dollar is. So we have a trade in front of us. The only thing I need to check is where's my target, which I'm gonna use the 60-minute time frame to specify my target, since we have a contradiction. So I'm not gonna change time frame. I'm gonna still use the 60, and the target here is 0.9262. That would be the final target for the trade with the Aussie dollar Canadian dollar, okay? The Aussie loonie, okay? So what I'm gonna do is I'm gonna put it in here. So we're gonna have a trade which is Aussie loonie, okay? So here's the trade. Final target is gonna be 0.9262. Safety target, we'll see that in a minute. Long entry, we're gonna go for 0.92. 25 plus 2 is going to be 27, and price is already there. So actually we are a little below that. 27, 92.27. Yes, we are a little below that. So it's time to enter. We'll enter with a market order, and then protective stop is going to go below 21 by 5. So that's going to be 16. So 0.9216. Very tiny risk in this trade. So how much? Tiny risk pig wise, of course, the risk depends on the amount of lots or micro lots or mini lots you're going to use. But pip wise, it's only 11 pips of risk. So if I add 11 to the entry, which is 92.27, that would bring the target at 92.38. Okay, so that would be the target price, and therefore this will be the plan for the trade. Okay, so if you want to take a screenshot, this is your time. Okay, and it's also time to take the trade, in the sense that we are meeting the entry point, as you can see on the chart here on the left. Okay, so Forex traders, entry 92.27, you get it slightly discounted at 24.9, and slightly different price depending on your brokers. Okay, very good, guys. So yeah, so we'll conclude the session here then. Okay, so we had a trade on the pound, we had a trade on the Aussie dollar, Canadian dollar. We had a trade on the NASDAQ that didn't work out, and I believe that was it. Okay, that was it for today. So anyway, guys, if you enjoyed the session, it would be appreciated if you can give us a thumbs up on the Facebook. Also, if you haven't clicked on subscribe or the bell, or both, please go ahead and do so that way you get real-time notifications and we can stay better connected. Okay, again, super pleasure to have spent this time with you guys. Hopefully I'll see you in a few hours from now, together with Chuck. We'll be conducting again one last time the special session to talk about options for intraday trading. I want to show you that in the schedule one more time, just in case you were not here at the beginning. And apart from the session that will take place at 10 p.m. Eastern time, as you can see here. Apart from this session, again, outside of our YouTube channel, you can also go ahead and use fxstreet.com. Okay, and if you were to look at fxstreet.com, and you were to look at the live videos and look at the schedule of videos, you would then see, that there is a already scheduled session for tomorrow, 2 p.m. GMT. Just make sure you do the math to find out exactly in your time zone when that is. We're gonna have a 45-minute session to talk about do's and don'ts in trading. And again, we will not be trading together that day. It's just going to be that one is going to be purely educational, but hopefully a good summary of important professional trading behaviors and certain things. Sometimes, I mean, if you read the summary of the session, you will understand better what we're going to discuss tomorrow. Okay, but sometimes traders look to improving the trading results by trying to improve their methodologies, where if they were to keep the methodology the way they have it, but they were to change certain behaviors, they would indeed improve results. So again, there are certain do's and don'ts that sometimes we are aware of and sometimes we are not, because we don't know what we don't know, isn't it? So again, it'll be a fun session tomorrow, and hopefully you'll join me. And if you join me, just say hi from the chat box tomorrow, because it's going to be crowded. Okay, so I'd love to know you are there. So you guys take care, and we will see you tomorrow in all those sessions. And again, keep up the good job, guys, and keep keep the discipline in place, okay? Especially in days like today where the first or the second trade doesn't make you happy enough, okay? It's important to remain in that professional mindset, managing our emotions, okay, and doing the professional job we are supposed to do, okay? So good job and see you soon, my friends. Bye-bye, everyone. Take care.